what I'd like to do is kind of go down through our panel members, and this is a wide variety of people that cut across insurance. So of the panel members, we have Tony Cotto, you all met earlier. With me, I have Dan Weber. Dan just joined as a young attorney. He joined our insurance industry group, so he's learning insurance, but he's a lot like Kyler in that he comes from the IT background. He comes from that aspect. He was in the military, has a security clearance, and it's from that perspective of what we deal with, of computer systems and interfaces, and how AI is going to change things, and automated claims adjudication, and all the things, some of which Kyler mentioned. Frankly, I've thought that we need the experience because I've got to understand it better as we apply regulation. Then I go down and I got Bob Hust, who has really, he and I started to dialogue inside our firm. He is with Todd, but he comes from the OEM. He comes from the auto industry, and he and I got on the phone one day and we started having a discussion of the things that we're talking about, and it was like night and day. He thinks of the world one way, I think of the world of a different way, and it really created a synergy of thought processes of things of which we kind of got to cut across industry lines as what we see the future bringing that would really help collaboratively figure out ways to do things better, differently, perhaps provide better consumer protection in a way our customers and clients can operate in this field. And then it's obviously Kyler, and Kyler, your last answer, the information presented is exactly what we're talking about. So one of the questions I want to throw out, really, and maybe this comes, Bob, to you, is from the auto side. You've heard a lot of the discussion on the insurance. What from the insurance discussions and the sandbox and innovation you've heard about, what comes up when you talk about how the OEMs and the manufacturing industry actually want to use data? And how do you want to actually look at the auto industry of, frankly, changing the paradigm and perhaps be disruptive in the marketplace?
Thanks, Greg. Good afternoon, everyone. Well, coming from the OE side, I think the prospect of big data is it's kind of hanging in the balance right now in terms of who's going to make the money from it. It will be interesting to see how it gets postured. I think everybody here, I'm sure, has a smartphone in their pocket, and we have all clicked through that agreement, and we have bought into whatever those agreements say. And I'm a lawyer, and I've never read one, and I have no idea what it says, but I've got an Apple phone as well. And I think what you're going to see, and you're seeing already, when you go to buy a car, you are going to be clicking through some things, whether you're using a pen or you're doing it online, and you're going to be signing away some rights to that data that the OEs are capturing. And the OEs are going to turn around and they're going to share that for profit with anyone they can share it with. And they may be interested in sharing it with insurance companies who are underwriting. They may be interested in sharing it with fast food people who want to know, do people who drive red Honda Civics like Taco Bell more than McDonald's? All of these different aspects of our existence, as related to the vehicle anyway, are going to have a value. And they're going to want to capture that value and of course, monetize it. And it's no different for insurance. And so if consumers were in a position out front to say, gee, I'm discounting, I deserve a discount, knock $1,000 off the sticker because you're making me give away my rights to big data. That might be a happy day for all of us buying new cars, but I think we all know from our iPhone and MacBook experiences that that's not how it works. You want the product, you've agreed to a price, and you're probably going to sign off on that. Later on, as that evolves more, you may have some disruptive car companies who will adopt a model that goes against the grain to try to say, hey, our cars can be cheaper if you don't want to give away your data. But that's 2 or 3 steps down the road. We're right at the point now as to who's going to control that data and who's going to make money off it.
So from the insurance side, what I see is the consumer groups, legislators, we have privacy issues, we have data breach issues, we have Fourth Amendment, we have all kinds of considerations, we have unfair trade practices, because if all of a sudden the car company is capturing not only telematics of how the car is operating or what it's doing, but it may capture conversations, it's now got internet capability, it may actually be able to push advertisements into the dashboard and the screen, and it may be able to give you a discount for going to the oil change because they know that you're needed because it's got all the information. From the insurance side, and maybe you're pushing the insurance too, because it could be incremental when you turn the automobile on, when you turn it off. I see a huge collision. And when we look from this side of insurance, we look at all kinds of issues being raised. So we go back to AI, and maybe the AI is taking it, the algorithms are taking whatever's being happening, and maybe the carrier, or frankly, maybe the OEM wants to get in the insurance business and manage that risk, especially as we move to autonomous, because now they own the automobile, or maybe a subsidiary that's got the ownership and leasing it out or incrementally pushing it out to someone, totally changes it. Regulators think that there's unfair trade practices and all these other things. So totally being with now policy, how the policymakers thinking about it, and maybe our Kentucky governor has started to think about these things as we've seen legislation come forward on such things.
Absolutely. So anytime you start talking about data, the first question that the policymakers ask is, whose is it? Do I own my own data? Well, think about all the things that you have to fill out forms for. And I'm going to tell you, I'll be the first to tell you, taking off my Kentucky government hat, of course, and just as a Kentucky citizen, one of the last people I would trust with data is the state government. Okay, but that notwithstanding, you want a driver's license, guess what? You got to fill out a bunch of data. You want to buy something, you got to fill out a bunch of data. You got to give that all to the government. So whose data is that? Is that still yours? And everything that's attached to it? That's one of the questions that the policymakers are trying to wrangle. Next question, obligation to protect the data, right? Sure, okay, state government has about zero obligation to protect, but if you're going to play in the consumer space, then all of a sudden you have other things. There's global standards, there are state-specific statutes, there are federal laws in the health insurance space that you got to deal with on how you protect data. And then the really nasty question comes with the what are you doing with the data? How are you using it? Because you can use it for certain things, but not other things, right? You talk about redlining. You talk about you can't factor in where someone lives when you quote their home insurance. These are things that, with more accurate data, I think policymakers will get more comfortable with letting you use it. But those are sort of the 3 buckets I look at when thinking of how the policymakers treat big data.
So I have to ask a follow-up question because Dennis had mentioned earlier about total disruption to the insurance industry. And I see a conflict. On the health side, legislative policymakers want everybody to be thrown into one big pool so nobody's kicked out because they've got a pre-existing condition. Now we're talking about, on the other side, we actually want very tailored, very specific risk management, which from the carrier's point of view, if we take out all the risk, we don't have anything to sell because what we're selling is frankly the arbitrage of how much risk there is. The actuary and the underwriters kind of got to decide what does that really mean and how do we price it, right? And so to me, the more we have data and whose data is it and what it's being used for, it raises all of these questions. And frankly, to the bigger picture, is I think we just started the discussions on data, right? Data privacy rights, just really getting started. We see Congress trying to weigh in. Now we've seen the NESC. We've seen some state legislators push stuff forward. What do you see in that paradigm?
So here, an interesting concept that I hadn't really thought of much recently that was brought to my attention is the idea of the risk pool of one. and this kind of goes back to the previous panel, right? What if, for the millennial consumer, right, who hates to have to deal with all these different transactions, I went to one insurance company, and I paid one insurance premium for the year. And that covers me for my car, that covers me for my cell phone, that covers me for my homeowners, that covers me for everything. My life insurance, everything. Risk pool of one. I have a risk number. That's going to take a long time to get there, but that's what data will enable.
Right.
And I think that, I mean, good or bad, that's for policymakers to decide. But that's the direction I think we're going, that your question gets to.
Yeah, I call that lifestyle coverage. If somebody's
Yes.
underwriting your lifestyle. Okay,
Rather
so,
than products,
Right.
rather than, yeah.
but that to me is a transformative change. The products don't exist like that. They just don't. Dan, you have a comment?
I do. I think about that a lot. As Greg mentioned, I'm new to the insurance space and I'm learning about it. And as I see the way in which big data is going to be able to provide us with more and more specific and precise information, sometimes I kind of feel like that's actually working in the opposite direction of the social good that insurance provides in terms of spreading some of that risk out there. And so I think that what's going to be interesting to kind of loop the legislative part of this back into the discussion is to see how, as we get more and more streams of data, and as we're able to make more and more precise risk decisions based on the specific information about an individual as opposed to the demographic information or whatever. What are we going to do whenever those algorithms start to create outcomes that may seem discriminatory? What are we going to do whenever those outcomes start to sort of split the difference between a person who's insurable and a person who isn't, whenever we're able to look at their 23andMe data and see that they maybe have a genetic disposition to something that might come down the road? And so I think that even outside of the legislative and the technical aspects of big data, I think that we're gonna find ourselves wandering into some really kind of deep ethical questions, and then we're going to have issues translating that. You know, whenever Kyler and his group create an algorithm that makes some of these decisions based on the numerical value of words, what's going to happen whenever the regulator comes in and goes, I'm not really sure about this. You're going to have to explain to me the way this algorithm works, so that I'm convinced that you're not using any data that we don't feel ethically comfortable with people using. I mean, I saw during my research for this a company that's offering a life insurance policy based on a selfie, and so now we're not only taking words and turning them into math, we're taking pixels from a camera and turning them into math and making a risk assessment based on that. What's the algorithm behind that, and what's it taking into consideration during that, that new data stream, that new set of inputs, and are we okay with that? And is it going to provide good outcomes?
Thanks.
No, didn't mean to one up you.
No, words. It's a great segment, actually. So one thing I want to point out that a lot of people, so AI is sort of a big black box to everyone, and when it's a big black box, it's unknown, and when it's unknown, there's fear there. So one thing I want to raise the curtain on with it is that when AI, all the neural networks and the things that make those decisions are just learning patterns based on the data that you put into it. So if you're a regulator, I wouldn't necessarily want, first of all, if you say you have to explain to me why it's turning down this 22-year-old for insurance, a neural network, right, currently as it stands, is not explainable. So it's just a bunch of, it's this big math equation that sort of learns its own little techniques for accurately predicting outcomes, but you can't go into it and say they were turned down because they're a male who's this age who has these risk conditions. It's not predictable like that. So as a regulator, I would stay away from trying to require explainable algorithms, because that kind of throws a wrench into being able to use them as it stands right now. What you could do, though, is you could regulate the inputs those algorithms. So you could say, we currently forbid you from using genetic sequences as inputs to that algorithm. Because even the people who built the algorithm itself can't explain what's happening inside of it. And I know that sounds scary, but it's really not. All it's doing is just sort of learning patterns on its own. The second thing I want to say about this is from the discriminatory standpoint, these things really are just mirrors of ourselves, mirrors of the data that we put into it. So if there's bias in our own decision making, then that's going to come out in our data, and these algorithms will learn it. So they're not coming up with biases on their own or sort of having this, they're going to take on their own personalities. They're just mirroring back the data that we feed them.
So you've really not met many regulators nor consumer groups, right? So I would imagine explaining to them that you can't explain it, that won't go over very well.
Well, the fascinating thing about that, to me, as a lawyer, is if you can't explain, even if you eliminate certain inputs, and you can't really explain the result, there's still, you can come at it the other way with the disparate impact. And if all of a sudden, only women between 27 and 30 can't get insurance for some reason, even if you can't figure out the reason for that, you may have regulators and legislators and courts saying, well, we don't need to know what the cause is or the intention, but we see the impact. Like everything, litigation will ensue no matter how good we are at planning the regulatory environment.
Right, and if it comes from the insurance side, they look at it from a little different perspective. They'll look at that you have disparate impact, but is that disparate impact bad or good? Insurance by its very nature, you are being selective of who you want to underwrite that risk, because that's why we call it risk transfer. I'm willing to take your risk, but only for a price. And for that price, I am being selective of what I want to write. Now the question is what's the rules around what I can do? And if it's at the back end, they really don't have much control. And that's really a lot of the discussion points we're seeing as who's going to control that dialogue right now from at least the insurance perspective. And the more we get this same type of confluence between other industries that encroach into insurance, I'm not sure what's going to happen.
No, and the risk pool of one really can be interesting because, as Dan was saying, also you have, if your risk pool can be, if so many inputs or so many characteristics of an individual person can be analyzed, there's going to come a time, and I don't want to get too dystopian about this, but there's going to come a time where we're going to have to decide what activities constitute basically being a normal person in society and what activities actually warrant an increase in premium. I don't think we want to incentivize everybody sitting on their couch and never leaving their house. That's probably not healthy for one reason, but my point is, if I'm a mountain biker, okay, maybe that's risky. If I'm a scuba diver or a skydiver or a lion tamer, those are different things. But if I just drive 11,000 miles instead of 10,000 miles, or you get into the genetic aspects of it, we're going to have to decide as a society what is legitimate for making those determinations. And I don't think it will happen smoothly. That's just my perspective.
No, I'll bring it back around to the talk about the sandbox, because one of the things that I think about is, I would agree with you, but where certain companies decide or society decides they won't underwrite that activity, if there is the opportunity to develop products, somebody for the right price, if you've got the right regulatory landscape to do it, will step in. I actually met with a company that, and maybe they may be good or bad, depending upon how they priced, but with all the California wildfires, there were multiple counties of which you couldn't get coverage. And of which, so then somebody steps in to innovate of saying, we'll be willing to write it and do it from a totally different perspective. So whether that's successful or not, but some people might be willing to step in to underwrite those things of which the normal product line will start to exclude. But we need the ability to be able to do that.
Well, to brighten the topic a little bit, and to talk about the ways in which big data, I think, can offer us offer a lot of social good. is that, you can't insure something that you can't measure. You can't decide how risky something is unless you can measure it. And this flow of big data coming in, all these different streams are going to provide us with an opportunity to insure activities that previously we weren't able to do because of the potential fraud or people, or we just didn't have any base of information to figure out about that. One of the things I was thinking about was a friend of mine recently told me that he loves to ski, and he said he's not going to go skiing anymore because part of what he does for a living involves being out and walking around, and he says he just can't take that risk anymore to be laid up. And so it got me thinking about ways in which some wearable technology and things like that could remove some of the risk of fraud and all of that, to where a person could, based on them sort of having some geolocation information to track that they're actually somewhere skiing, and even some of the stuff that can be pulled off the Fitbits, he could insure perhaps up to the cost of his deductible, this activity that he wants to do. And because we can sort of track the fact that he's going to be doing that, he can't just hurt himself in the backyard and say he did a skiing, because they can track that information. He might be able to enjoy things more in life. He might be able to take some of those risks while also hedging his bet against the possibility of it ending badly for him. So that actually kind of loops back in terms of InsureTech, people coming into the space and saying, I'm going to offer a product like that. But being that doesn't fall into a specific bucket, then we have to start talking to the legislators about, is that something that we're, as a society, we want to explore, looking at, insuring against specific activities, and so the ways in which that I think is going to improve people's lives, I think has a lot of opportunities for us to explore. But it's a matter of creating an environment like the sandbox that doesn't have people who have the technical abilities to come into that space. They don't walk into it, give a guy like Greg Mitchell a call, hear about all the challenges, and go, I'm going to invent something else. I'm going to go into a different kind of application because I don't want to work. I don't want to work in that complex of an environment. So I think if we can create an environment and we can create a community around people that are innovating in this way, that there's a lot of real social good, a lot of real improvements in people's day-to-day lives that we could start to enable.
I just want real tack on. It's not just the guys who are skiing for fun either, right? It's the people who are in professional lines that are hard to insure. It's the aerial photographers of the world who can't find coverage. Well, let's find a way to get those people covered, because I want them covered and I want those companies writing in Kentucky.
So Tony, with all the challenges to big data, I mean, you've been at the NAIC, you've been on staff for a number of years dealing with the federal government. We're on point with cybersecurity. I mean, how is it that we can find the right balance? Because what's going on in the NAIC right now. The consumer groups are thinking everything's evil with regard to big data, and right now, very little of the industry is stepping up to try to provide the right balance and the kind of things that Dan was just talking about.
I think the consumer groups are terrified. In many ways, the consumer groups are terrified of additional accuracy of risk, right? Like the smaller the risk pool gets, the more accurate it gets. Some people are going to have price increases coming out of that. That's the real world. That's what the consumer groups are at. From the regulator's perspective, the point is really how do we not hamper the innovation, but increase the likelihood that someone with a claim is going to get paid. That's really what it comes down to for the regulators. Someone with a claim that should be paid will get paid, and there's no danger of these, we've said fly-by-night a few times already here, whether it's someone coming out with a cyber liability policy, because that's a whole other world that we haven't even gotten into. I don't think that could take an entire day of itself. But how are the insurance companies protecting consumer data, and how are the insurers using it is going to be, the companies need to come forward and say, this is what we're doing with it, this is why this is pro-consumer, and do that in a public forum. Doing that behind closed doors doesn't help anyone. And doing it amongst yourselves doesn't help anybody. take advantage of the fact we can blast state regulation and state processes all day long, but it is the most transparent of any regulatory process you will find. It is the NAIC's and the insurance regulatory process. Anyone can walk up to the table and give comments at any of their meetings. So take advantage of that. That would be the biggest advice I can give to the insurance industry. Take advantage of it. Show up and be heard. And again, no guarantees you're going to like the outcome, but at least you will be heard. Unlike with the federal process, where you will never see anything until it's done, until it's already baked. And I will take advantage, as I'm blasting our federal colleagues, if you have disparate impact issues, look at them. They are behind every disparate impact lawsuit and every disparate impact issue, not the state regulators. That's all at the federal level.
Well, you gave me the opening, and part of the topic is the cloud. So we're talking about big data, and one of the aspects of big data is how do you find data? How do you define whose data is it? And the second it gets into the cloud, do you know who's responsible? Who is liable if something happens? Obviously, we're sitting in Indiana. Everybody knows that we've had big data breaches around here, of which has not been pleasant. Experience, all aspects of access, breaches, and what that means. So in the world we're just talking about, whether it's insurance data or whether it's coming out of the automobile and it's shared and it goes up the line and who has it, how do we account for those issues?
That's a great question, and I think there are standard setting bodies for data, right? You've got ISO, you've got, there are international bodies, the federal government's talking about it. There are also some innovative solutions and innovative companies like BitSight, which if no one's heard of them, their concept is sort of a cybersecurity score that's the equivalent of a credit score. So they go in and they test your company and then they come out with a score and say, your cybersecurity risk is X. Now go take that piece of paper and go to your insurance carrier and see what they'll give you for it. These concepts, I think there's a lot of growth potential there as well, but ultimately where the data is and who's held liable, I don't know the answer to. I don't know if anyone else has thoughts on it, but that's a great question.
I'll throw it out to counter Dan. From IT perspective, it's a question I have is we move to the cloud. You're talking about your iPhone and they've got a cloud and I'm not sure where the data is. I have no idea. I wonder whether IT companies know where the data is.
Well, that's something that coming not only from a technical background, but actually a technical background within a law firm that I've thought about a good bit. When we bring something in as simple as OneDrive, which everyone may have probably wandered across it. It's just part of the new Microsoft environment. You have these situations where not only is your data up in the cloud, but it's also on your computer. And so do we have a potential where that same data, because it's being near two places, is subject to two different jurisdictions, and that might have conflicting ideas about what it takes to get that turned over to law enforcement. We also have things that people don't even know are going on with those systems because they don't understand it. That the way that some systems are set up in OneDrive, it doesn't keep just the document, not the latest and greatest. It will keep every iteration of it, every time you hit the save button, and you can go back and get those previous copies. And so, what do we have in a situation like that in terms of if something is discoverable? Do you have to give them the last one, or do you have to give them all of them? And whenever people are maintaining insurance data, if they're maintaining them in certain systems that have this going on, and they don't have somebody who can explain that to them, then they may be causing breaches, or they may be exposing information whenever they turn something over, or whenever they transmit something that they don't even know they still have. I find it amazing how we go into the convenience that's offered by a lot of these cloud systems, and have people who are utterly incurious about the way that they work and the way that the data is structured. And so I think that there's a real, being how highly regulated insurance is, there's going to need to be some real education provided to people so that they don't find themselves in all sorts of situations where they're having to notify people because they inadvertently let something from their cloud be transferred to somebody else.
And the regulators are fully aware of how expensive those breach notifications are. It is not taken lightly.
Yeah, I saw that for an average small business, a data breach, it's going to cost you about $86,500. And so, as we're looking at the way that those systems are designed, the way that they're going to be regulated, what's going to trigger a notification requirement. That's going to require an entire rewriting of a lot of the definitions of what is personal information and what is the kind of information that a insurer might even want to take from you. There's such a heightened risk of what it triggers if you have a data breach with certain kinds of information, that based on the way that law develops, people might say, I'd rather make my risk decisions without having that information about you, because just keeping it is the risk that is going to expose me to outweighs the data point. So I'd rather just go ahead and kind of leave that one with you, and I'll keep this amount of information, because my machine learning is going to figure out other patterns that make the same assessment without having that data point that requires me to additional scrutiny or additional security requirements.
Comment about the challenge that some of these regulations can place on companies. So I was in the healthcare space, and that's a lot of regulation there. And we made a hospital software system that we could not sell into Canada because of one of the regulations that they passed, based on just privacy. So well-intentioned build, but that basically kept us out of the entire market. And then also with where is your data located? If you don't know, I mean, it could be mirrored in many different places, but I think the conversation should change from that. Like, that is not as big of a deal to me personally. What's a bigger deal is when that data is breached. So I actually, if we can't store our data in the EU, that basically means that our work is double, because we have to create two systems instead of one system. So you've just increased our costs by 2x by having a regulation like that. What I find to be the most effective and also efficient from a development standpoint are those data breach notifications. And I think I would actually like to see more of those in other industries, because that just increases transparency. And then the transparency lets the market have an impact. So I don't know, Dan, if that 86K was taking into account the cost of lost customers in the future, but that's really the biggest impact that you get there. And the data breach notifications empower them.
I think that that's all great points. I'm actually not sure if it is in that number either when I saw that statistic. But I think that we also have, as much as I'm all for disclosure as well, I think that technology and some of these data streams are going to enable transparency, which I think was a comment that Matt made during the InsuranceConnect panel. I think that's going to have a lot of value to the process as well. But I also think that you could have a situation where if those data breach notification laws become so easy to trigger, and we're working with so much data trying to make it move seamlessly between different organizations and different systems, that you could have a sort of the opposite effect where breach notifications are being triggered so quickly because you have to notify when you think it happened before you even can figure out if it did happen. You can end up with so many notifications being triggered so often that people look at it and they just go, yeah, whatever. Okay, yeah, someone may have found this out, and it ends up defeating the purpose of it. So I think that, like anything, we're going to have to deal with balance. We're going to have to find a way in which we're creating that transparency and the good that's created by that, without also creating a situation where it's either impossible for data to move between systems, or the risk of some sort of disclosure of metadata that's associated with someone's personal data triggers a notification to the point that every couple of days I'm getting an email or a letter saying, hey, by the way, we had a 10-second lapse in our system that could have potentially exposed your information to the Russians.
So doesn't that raise the question then, what got released? And it's fine that you gave me notice, but what does that do for me, right?
Right.
So Cotto, you mentioned about having systems in, say, the EU. Insurance regulators, people that do business, it's coming. The EU has adopted GDPR. And GDPR is coming at it from a total different perspective. It's not notice. It's if I'm no longer do business with you, you got to get rid of my data. And so when I asked the first question about where is the data, it's in the cloud and who knows where it is, I really wonder how companies are going to be able to trace. It says when that kicks in and you got to get rid of my data. Because when I deal with insurance regulators when it comes to the breaches, they're like, how can you assure me that it's gone, that it's been deleted, that you've done remediation? And I know that's one of the projects Dan's been working on. It's, do you take it and you got to destroy it? Is there a process out there to be absolutely certain? To me, I haven't seen really necessarily good answers, and at least not ones that I've been able to communicate to regulators that give some comfort, at least from their regulatory hat, that you've done what's necessary to make people comfortable.
Yeah, in terms of getting rid of data, whenever you have a lot of really smart people trying to figure out a way to make it so it's impossible for you to lose data, backs it up and backs it up again, it does become a really challenging issue. So, as some of those regulations might come into play in the industry with insurance, you're going to find yourself having to potentially forego a lot of innovation and potentially forego a lot of convenience and seamless integration between systems, so as to be able to contain your data enough to be able to destroy it if there's a law mandating that. So again, it's all valid competing interests in this this juggling 10 balls at the same time.
Well, with that, thank you. Really much appreciate your participation.